Well, thanks for tuning into the trade setup. We are late today. Some technical glitches, unfortunately, but we are here and let's take stock of the situation. We're still about, well, 20 minutes before pre-open and a full 35 minutes before market open. So the SGX Nifty would be indicating a start which is in the red, in line with what the Asian markets are indicating as well. So keep that at the back of your mind. Actually, it's moved into the green because of the Dow futures maybe, and the Dow futures were in the positive. Simply because what's happened is that there has been a bit of a backstop that the Fed seems to have put in place for the mark for from a market's perspective, so or from a SVB perspective. And I think on just hear me out. We don't have graphics for it because it happened rather late in the day today. But on SVB, the US says that all SVB deposits are safe. It creates a new backstop for banks, says that actions will fully protect all SVB depositors' money. And the Fed also creates a program to lend against collaterals pledged at par. So there is there is a Fed action that has come into place. In fact, there is a report on BQ Prime that does this make more rate hikes difficult to execute? Goldman Sachs, on its part, has said they did not expect any kind of rate hikes in the March policy, simply because of the collateral damage issues that may be at play for the Fed. So I think it's important to see all of this in that light. The trade setup, kind of changes a little bit, if you will. The trade setup, that is simply because the domestic actions aren't the best as yet. So you got to keep the broader issue in mind while we think of what the SVB-led impact would be. So there could be not a fears of a contagion as were there in place yesterday, but the setup certainly shows declines. FMCG being the only hiding place shows the defensive bent of the market. Can it change now post the Fed action? Maybe it could, but otherwise, I, I mean, it's difficult to quite figure out whether there will be large collateral issues at place or no, because there are two banks which have failed, by the way. Healthcare is being shunned at all levels, but valuations are now attractive for long-term contrarians as per most experts. The problem for the index is the bank nifty, which is dragged down by private sector banks, all trading below key averages. Just look at what's happened to banks, and it'll show you a picture or two. I mean, HDFC Bank, ICICI Bank, you name it, and all of these stocks are down, and some of these are trading below some long-term key averages as well. I think ICICI Bank in particular is below the 200-day EMA, HDFC Bank below the 100 EMA, Kotak is trading below its short-term and long-term moving averages as well. And the price cuts were fairly severe for the banks in Friday's session. I mean, HDFC Bank was the top loser, but some of the others too had come off quite materially. So that has to be kept in mind. Um, I think if you just look at the picture at large, it doesn't look healthy. But like I said, the Fed pivot, if you will, a bit of a pivot, if you will, or the expectations of a pivot and the Fed actions taken yesterday as a backstop maybe gives the market a breathing space. Keep in mind, Dow futures are in the green. Within that light now, let's take a look at the stocks for the day today. It becomes tricky, viewers, because the trend was firmly negative, but the latest actions may move toward the negative sentiment on the markets. In light of that, Ambuja Cement, the first stock on the radar, it's a positive development. Adani family fully prepays $2.15 billion worth of share back financing and $500 billion of bridge loan for the Ambuja acquisition. That's a big one. Let's see if Ambuja reacts to it. There's also news flow from other sources which I'm not giving credence to because I don't have confirmation of the same, that the Adani family is looking to sell 5% stake in Ambuja. I don't know how credible is that, but even if that happens, I think this piece of news should keep Ambuja doing okay. Standard disclosure: the Adani Group is in the process of acquiring 49% stake in Quintillion Business Media, which owns BQ Prime. Then there is Nazara Tech. Now remember, as of yesterday, this was a big negative for Nazara, that two subsidiaries hold cash worth 64 crores in SVB. Because of the actions taken today, the mood around that changes. I will not be surprised if Nazara doesn't react too negatively. The belief was that, oh, would it hit a lower circuit? Now, could that change today? Sure, it could. ICICI Bank, ICICI Lombard General Insurance Company, and this also brings HDFC Bank into play, by the way. So, one, RBI has granted ICICI Bank's request for extension in timeline for divesting stake in ICICI Lombard General Insurance for 1 year to September 9, 2024, Remember, it has to reduce its shareholding in ICICI Lombard to less than 30%. Now, the thing is, this is a positive piece of news per se for ICICI Lombard. Maybe HDFC Bank also gets this leeway, and therefore HDFC Bank could also be in focus today. But Morgan Stanley, on its part, says that because it's an extension by just 1 year, they do not expect any kind of runaway or durable relief rally in the stock. Their target price is 1400, by the way. I still feel that there could be a small relief rally today. So let's wait and watch. We might see that happening in ICICI Lombard today. Then IndusInd Bank. So many people are negative that the extension has only been 2 years. I thought Morgan Stanley put into perspective well. They say that we continue to see strong potential for revenue growth acceleration and credit cost moderation at IndusInd, which can drive re-rating as well over the next few years. Near term, though, the lower than expected tenor extension could drive some volatility in the stock. They stay overweight with the target price of 1525. Um, would be interesting to see if IndusInd Bank does react negatively today. HAL, one more order, 667 crores. The stock continues to bag orders. Who knows, may react. I'll watch out for FMCG and QSR stocks. The global palm oil market apparently is expected to tighten this year. So the HULs, GCPLs, ITCs, Britannias will all be in focus. QSR companies like Westlife, Burger King will be in focus. And the reason why it's expected to tighten this year is because floods and older trees in constrained production in Malaysia, actually even in Indonesia, if I'm not wrong. The story has it that the number of trees older than 25 years have also expanded, meaning a portion of the plantation will be less productive. So if all of this leads to very tight palm oil market, it increases the input cost for FMCG firms, some QSR firms, and therefore they could, I'm not saying they'll react necessarily today, but it's a piece to be kept in mind that could hit their margin recovery process, which is what a lot of people are banking on. Mahindra and Mahindra production sales numbers looked okay, 14% higher YOY. Who knows, maybe the stock reacts a bit. A couple of deals on which we do not have information, but I should have bring it out to you. So sticking with the M&M group, Mahindra CI could be a stock in focus because CNBC has learned that M&M will sell 4.6% stake in Mahindra CI via block deals at a floor price of 355. Let's see if it happens. More on the deal flow. Again, I do not have independent confirmation of the same, but apparently Sona Comstar would be in focus. It was down in Friday's session, if I'm not wrong. And CNBC Abbas says that Blackstone will sell a stake via block deals worth up to 3,200 crores at up to 6% discount. May even sell the entire 20% stake depending on the demand. Blackstone is likely to sell stake this week. That is not next week, this week. So therefore, if this happens, it could put further pressure on Sona Comstar as well. So do watch out for that one. And of course, like I've said, that do watch out for pharma and IT. They're being shunned, literally shunned. Look at the kind of price moves that happen in pharmaceuticals, for example. Gland, Shilpa, Aarti Drugs, Granules, all of them are down and out. And these are stocks which are already trading, some of them already trading at 52-week lows and have succumbed to further selling pressure. Or for that matter, select IT names in mid-cap IT, particularly in Friday's session. Sonata, Intellect, Zensa, Nucleus was down 10%. So just the kind of losses that came into some of these. Maybe IT might show a bit of a reversal. Pharma is a different kettle of fish. Have a safe day ahead. And we'll be talking about SVB and its implications and the latest Fed actions with Ajay Srivastava at 10 a.m. So you might want to tune in for that. Of course, a bunch of market conversations happen between 11 a.m. with Jigar Mistry and Ruchit Jain by my colleagues. And I'll also be talking to a bunch of consumer companies on what is the Indian consumer doing. We start off that series of conversations with Keshav Bhajanka, ED of Century Ply.